Good morning, everyone. It is 8 a.m. Chicago time on Wednesday, the 7th of January 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Several things happened overnight driving the action. German unemployment came out worse. Easy unemployment in line. Eurozone CPI is worse year on year, but better on the core. Came out higher. For this reason, we saw a pop up in indices at about 4 a.m. Central Time. Equity markets open higher following losses on Tuesday and ahead of Eurozone CPI and FOMC minutes. Markets hold gains amid mixed Eurozone data releases. Greek equities trade lower by over 1% amid sharp rise in bond yields. And then UK-listed energy producers trade heavy as Brent crude futures test $50 per barrel. European banks trade mixed. The Japanese government's likely to say economy is to contract this fiscal year. And the euro-US dollar pair hit fresh new 9-year lows with a low of about $1.18, $1.1875 or so. Let's see what the euro's doing. Looks like $1.1835 right now. So $1.1825 on the low. This is the low from February 2006. February 2006, almost 9 years. Just a moment ago, we got December ADP employment change came in better at 241,000 versus 225,000. Looking ahead, we have 9:30 Central weekly crude oil inventories. Expecting 1 million. Gasoline 1 million, distillate 1 million. Yeah, I'm not sure if those numbers are right, actually. At 1 o'clock, we have Fed releases minutes from December's 16th and 17th FOMC meetings. And at 5:30 Central, we have Fed's Evans on monetary policy in Chicago. Let's take a look at the technical picture. Start with yesterday's action. I'd like to show you a weekly chart as well as looking at the Euro stocks and the Bund for some clues. So this is yesterday's action here. We opened right in the high volume area and the value area of Monday. We tested higher. The hypothesis, the primary hypothesis from yesterday was for a test higher, potentially choppy open, a test higher, potentially sellers to come in and push to 2008. You might have seen that in yesterday's video. 2008, 2002, and I was looking for 1987.50 on the low. We pushed through 1987.50 by a few ticks, 1984.25, and then we had a strong bounce up, a nice big 22 point bounce, which continued higher for about almost a 30 point bounce from the low before it sold off into the close. We had a VPOC shift on the close up to 96, looked like it was going to stabilize, and it held that area into the close. Very methodical auction yesterday, lots of opportunity. So this is what it looks like on Orenco, and the market closing below IB in range, in value, and holding steady. While looking at the markets overnight, I did warn on Twitter, might have been about 7 or 7:30 p.m. Central, to watch out if you're overly bearish. That the market is shaping up to take a small bounce. If we look at the S&P breadth, This is Friday's action right here. We pushed up almost to the first sigma high, and then we sold off to go negative. Pretty strong sell-off. And then on Monday we opened at negative 200 on the S&P breadth. What this means is 200. There are 200 more. Out of the 500, there are 200 more that are negative than positive, and it basically drove down to almost the second sigma value, and held steady for the session. You could see the low here is at negative 430 or so. Yesterday it opened just above zero, and then with the sell-off it sold off, but look at how it stabilizes and holds a little bit higher. That's one clue. The other clue is the way Delta behaved here. We opened yesterday. We opened not yesterday, Monday. We opened right below the prior day's range, tested into it and sold off, and had some pretty good selling. We broke the negative 40,000 threshold, which is about the area when the market starts to trend on Delta, and so we had some pretty strong selling that day. But yesterday, even though we pushed lower, the participation on the sell side, meaning those traders hitting the bid versus the offer, were not as aggressive. And as soon as we turned up, the Delta very quickly came back to zero and held a higher close. So just those two rough clues there give us an idea that there may be some participation on the buy side as traders look for the bounce. The big clue, the big auction and contextual clue, is that we did push to that target of 1987, 1987.50 or so. Yeah, I guess it's 1987. We did push to it, and we did take a bounce from there. These levels are not supposed to be to the dot or to the tick. Oftentimes they are, but they're not intended to be that way. These are general auction levels, especially on a chart with a big time frame like this one. And so the idea here is that the market made new highs. There's very little consensus on value as we come down. This is one of the ugliest profiles I've seen in a while here. Very poor high, and then a very toothy, very edgy profile all the way down, down to the key value area and the key point of control in this range of 1987. We test, we bounce. The expectation is the market's likely to push back up, and I'm looking for a retest of the mid, always looking for retests of the mid at some point. So the consensus, the probabilities for today are playing on the buy side. The expectation is either chop or to grind its way back up and retest some of the levels above. Note that the overnight highs at 2014. Remember 2014 again. I'm going to repeat that it's been the over/under line in this zone. It's a very important low volume node. It's been a very important low volume node. Although it's gotten filled in a little bit, and the overnight session pushed up to it by a tick before backing off. The move up overnight is fairly impulsive. A very clear over/under line here at 2003. The LVN, as long as we hold 2003, which is the LVN in the mid area, overnight, the expectation is for this to continue higher into today's session. So be careful if you're still thinking short. The short term or the intermediate term trend is down, but the short term trend may be switching higher. The long term trend is up, and there are participants. There's evidence of participants in different time frames right now. It's, the volume and the type of action we have tells us that the OTF is participating in different time frames in this action. Creates opportunity, but wherever there's opportunity, there's also additional risk. So again, as always, managing the risk is key. Another thing I wanted to go over real quick here is the weekly profile. So this is a weekly rundown of what the profiles have been doing. You can see here a double top on the weekly, 2088.75 to 2888.75. This is a week high. Given that it's a week high and after consolidation for a while, all the way back to October, the expectation is this is not going to last. Statistically, this is not likely to last, but it's hard to tell. There's a caveat of what oil is doing and the contagion that comes from oil dropping as much as it has. In the past, it has not boded well for stocks for oil to drop that far. It starts to affect a lot of the heavy energy sector stocks, which it already has, and that gets reflected in the equity indices as well. And it starts to pull on everything. Keep an eye out on the energy sector bonds, junk bonds, basically, and the yield on those versus the return on equities, and that generally that gives us an idea of what's likely to happen when we have a situation that involves energy like it does. I won't get into too much detail there with the macros, but this is something, even though structurally and technically, and my point is, even though structurally and technically we have a weak high and something that looks like a pullback, you can see here the 87 being tested and the market bouncing pretty strong. These are weekly profiles. Market bouncing pretty strong into this LVN zone from back here in December. This looks like it is a pullback for further highs, but again, oil kind of puts a twist on that, and it gives us less certainty. Above us, look for 2350. For today, above us, look for 2350 as the key target, and then the next CHVN of 2028.75. As we extend this profile out, we see that we're approaching a pretty decent LVN zone here. So 2028.75 is the extended target, but right here, 23 is the key target above today. The primary hypothesis is CHOP with a potential test responsive selling down towards the point of control, and then I expect buyers to come in and to push this up and give us a bit of a pullback. The midpoint of this entire swing low is 2036.50. I know that's a lot to digest, but hopefully that's clear to you. The other hypotheses, of course, are to take out the overnight high, test for buyers, not find buyers, push very quickly back down to 1994, and retest the 87, 50, 87 area again. That would be the secondary hypothesis. So today it's important to just sit and wait. Remember, we do have the Fed minutes coming out later, and for those who trade energies, crude oil inventories at 9:30. Good luck, and I'll catch you tomorrow. Take care.